But of course, this was later denied by the management of the company. But let's now navigate our conversation to Anirudh, who is waiting on the sidelines and help us understand what does he actually make out of this whole fiasco between the Paytm. How does he look at, does he now recommend Paytm as one of the buy? Which camp does he belongs to for Paytm? That's essentially one. And second, how does he look at Jio Financial Services? Morning there.
Morning, Nikki. Thank you for having me.
Pleasure.
So I belong to the camp where we are no against Paytm. We have been from the very beginning. Nikki, there is a particular way how we look at new age stocks. When these companies like Paytm and Zomato, they came at a lofty valuations, we were very, very against them. This is a known economy run. I've emphasized it time and again that in a known economy run, there are only two type of broader themes that do well. It is either interest rate sensitives or it would be a capex theme. This time the conditions were better for the capex and they played out really well. When it comes to new age stocks, we are waiting on the sidelines. We'll wait for another couple of years. Let's see who survives, where management shifts happen, where the competition sets in, and then take a call for the next bull run.
Okay, there was a bit of chatter, actually, Business Standard report, which highlighted that perhaps both HDFC Bank and Jio Financial Services could be the possible contenders for lapping up Paytm's wallet. And we saw that momentum also playing up for Jio Financial Services yesterday. There was a good 15% uptick that we saw overall on Jio Financial Services. Of course, there is a bit of profit booking which was crept in today's session. How do you view this NBFC? That's point number one. Do you find the valuations reasonable enough? And at this point of time also, what kind of strategy can one really adapt or look at for this counter?
Are you talking about Jio Financial
Yes.
Services? Yes. So Jio Financial Services is a very solid bet. They're entirely different. So we have a very different stand on Jio Financial Services. I think it will be the leader when it comes to, what do you call it? The loans, retail loans, and also the partnership with BlackRock is going to help this company. Jio is backed by Reliance, and any company which is backed by Reliance and has solid plans for the future, be it Jio Financial Services, be it Jio Telecom, be it Reliance Retail, all these companies have a very bright future because you have solid money backing them. Then automatically you get the best talent. You have a very long-term vision. But when it comes to companies like Paytm, things are very, very different. I have dealt with Paytm. I've talked to their management. I have talked to their middle-level management as well. With the level of market capitalization that this company was commanding, I think the management was not in place. There were no solid fundamentals that supported this kind of, I would say, market capitalization that Paytm commanded. And things needed to be changed, and rightly they have. I think RBI is taking the right decision to set things in place for these digital lending platforms.
So what's your strategy for Jio Financial Services? Sure, it's a solid bet, that's right at the opening comment. But do you find the valuations attractive? And from a one-year perspective, not really a near-term bet, would you recommend a buy rating for this one?
Yes, for Jio Financial Services, we are still bullish, and we think that going 1 year down the line, markets now, Nikki, the major point is not Jio Financial Services. The major points of the markets are now entering a zone where they're becoming expensive, and with the rate that they are going, they'll soon become exuberant, and we'll see a lot of volatility and possible corrections going forward as well. So in the last 1.5, 2 years, I think this is the time we are exercising some caution. When it comes to caution, it comes to the whole market as well, and Jio Financial Services is also included in that. Yes, but as a company, the fundamentals are very solid, backed by a very solid group, partnered with the best in the world. So Jio Financial Services could be a part of the portfolio for anybody who's looking to invest in a quality NBFC.
Okay, quality NBFC. Okay, but let's take a step back and understand that the next big trigger for the market, of course, will be our RBI monetary policy. And the meeting for it at least starts today. The outcome would be in the next 2 days. We are seeing a lot of volatility playing out in the global markets, right? Especially in US and China, massive carnage going on in small caps when it comes to China. Indian mid caps are running from the domestic liquidity too. What kind of sense are you gathering with what kind of expectation that you have from RBI monetary policy? That's one. What kind of impact do you see when it comes to the sectors if there is some amount of announcement that comes through? That's B. What's your assessment?
Okay. So first of all, to answer your question, there are a couple of them. Firstly, the RBI monetary policy. So the RBI monetary policy is a global phenomena, and it is held. Every decision is taken by the Fed. We are just reacting to what the Fed is saying. So in the last episode also, I had mentioned that the Fed has now said that the inflation worries are over, and they are now looking for a rate cut. Nikki, if we talk about the last 3 years, we generally have a tendency to go against the Fed, but the market doesn't. In 2020, when the Fed said that we are going to give money supply, we are going to print the notes, everybody believed that the COVID would take the markets down. It happened the other way around. In 2021, they said we have an inflation problem. Everybody was bullish, but the markets then they went down. And then finally today they say that, okay, the inflation worries are over. And now we'll give a rate cut maybe somewhere in March or somewhere in June. So now everybody's contemplating when the rate cut will happen. The point now remains, Nikki, primarily is that Fed has said that the inflation worries are over, and that is it. Rate cut is just an event now. So RBI, I believe, would react according to that. We were in a very, very comfortable spot when it comes to inflation. Our RBI did not give the necessary stops, and we did not see that inflation scare in India. RBI, I think, is in a very comfortable spot. We could see a rate cut coming soon. Yeah, the election is coming. The food inflation could be a worry. So maybe this time we won't see a rate cut. But yes, a couple of months down the line, we are expecting a rate cut. And the RBI, Nirmala Sitharaman, the Honorable Finance Minister, had made it very, very clear that how they are promoting the bond markets in India. And that is also a very, very important step when it comes to looking at how the rates would flow in India for the next, I would say, a couple of years.
What I'd also want to chat about is how do you look at, do you expect some rate cuts to come through? If not rate cuts, maybe CRR or OMO operations to come through in this monetary policy. What's your expectation there? And B, in light of that, how do you see the banking sector? That's B. C, also your views on HDFC Bank because of the development which suggests that it's going to be lapping up for the subsidiaries that stake in INVasset Bank.
Okay. So first of all, when it comes to, are we expecting any rate cuts or, yeah. So this time we're not expecting any. We are going into the election year, and I think the government would maintain the status quo. That's our call. And the next thing is you were asking about HDFC Bank. Yes, I think when it comes to the valuations of HDFC Bank, they are where they should have been. They've taken a price cut. They've taken a time cut. Though we are not invested in HDFC Bank, but we may be open to looking into HDFC Bank in the very near future. As the markets, they are turning expensive now. So counters like HDFC Bank would provide us a degree of comfort going ahead due to their low beta overall. And then when it comes to IndusInd Bank, the HDFC IndusInd Bank thing that was happening, I don't think there is a need for HDFC to do that. I think it'll be more of a diversification. If that IndusInd Bank HDFC deal happens, we'll look at the things. I think HDFC Bank has a strong counter in itself, a strong business model in itself, and they should first really work upon getting their things in place with the merger with HDFC Limited and get things in order on the ground, then go in for such investments.
Okay, clearly these investments are not for the bank per se, but for AMCs and insurance for which they've taken their, approval. In light of that, also, would you hold the same view?
Actually, we have not been studying it that much currently. So I think it would not be prudent for me to comment on how HDFC Bank is going to handle the stake that they are got the permission from the RBI to invest in.
That excites you within the primary market right now? We have a couple of listings this week. Also, we have a couple of IPOs which have opened. One point is the Rashi, that's Rashi Peripherals, which is a Madhukela wife-backed company. The other one, of course, was the Park, which opened for subscription today, and then we have the two small finance bank. Anything that looks interesting from the space of the IPOs this week around?
Currently, we are in a phase where we believe that the markets, as I told you, have become expensive for us. So right now we are taking a step backward at INVasset PMS for us and all our clients, though it's a personal call for us. But yes, we have been very bullish for the last 1.5 year. Our PMS has performed pretty well in last year. We were the best performing PMS in the country. But yeah, now as the market, it's more of a behavioral thing. The way the retail is
I'm
entering,
sorry to cut you
and
there, Anirudh. I'm so sorry to cut you there. But one thing that I understand that right now you're being a little more conservative when it comes to deploying the money out there in the equity markets. But even at this time, when you're sitting high on cash, what is that one bet or theme that you're completely gung-ho on, irrespective of which direction the market goes?
the the themes, if you talk about the broader market run, there is no problem with the themes that are out there. So the capex theme, which includes defense, railways, infrastructure, power, the themes are all right, but sometimes they just get a little bit overbought, and then the market just needs to take a breather. So the themes are out there, are perfectly all right. The public capex has done its part. The private capex is now going to join in. That'll add to the capex theme. And then, the Fed saying that the inflation is now under control, domestic interest rate sensitives, which are dependent upon domestic consumption, like real estate and autos, could do pretty well. And if the global growth kicks in, which we are a little bit skeptical about, sectors like metals and all should do well. There is a lot of shortage for metals and scrap in India. You can feel it on the ground. There is a lot of shortage for copper scrap in India. There is a lot of shortage for copper and aluminium in India. So metal sector should do pretty well going forward. Yes. So the overall theme is okay. The old economy run doesn't have a problem, but now the problem remains entirely on if the market is expensive or not, and if a correction comes, how deep would it be? Yes. But if you are talking from a 2-year perspective, yes, the themes that I talk about today, we are very gung-ho and bullish on them.
All right, Anirudh, we'll just leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you, Nikki.
Pleasure. Well, joining up next is Jay Thakkar, who heads the